And welcome to a VSA Capital video blog with myself, Andrew Monk, the Chief Executive of VSA Capital, and delighted today to have Rob Appleby, the Chief Executive of Digital Payments Group. Rob, hello, how are you?
Hi, Andrew. Many thanks for having me on today.
Not at all. Now, Digital Payments Group, there's sort of a bit of a clue, I guess, in the name, digital and payments, and it's something obviously in coronavirus times we're all getting used to because we all pay for everything digitally now. But why don't you just quickly in the first sort of minute explain what Digital Payments Group actually does?
Yeah, absolutely. So Digital Payments Group is a hub or a backbone technology company. We're enabling clients to innovate and bring their own great payments products to the market. Ultimately, our clients, such as market brands or fintechs or financial institutions, they can use our vertically integrated platform to design, build, and deploy their own value and revenue generating payments products. Maybe to simplify this, we do this on three fronts. So we're a card issuing processor. We're certified by MasterCard and Discover. We can issue and support the devices for our clients' end users. That might be things like physical cards, virtual cards, digital wallets. In fact, we support tokenization as well, things like Apple Pay and Google Pay. Then secondly, we process the transactions for these devices. So in fact, we process billions in value of transactions each year. We're effectively an electronic money ledger in the background. So any transaction that happens, it might be on your Apple Watch or contactless or just withdrawing cash. We authorize that across our MasterCard and Discover integrations. And then thirdly, we offer open APIs coupled with real-time data feeds that enable our clients to build and customize their own applications and tools in the background. Or in fact, we have a whole suite of those services that we can offer all of that ourselves as well.
Well, that was quite a lot in one go, but I love it. You summed it up very quickly, and you clearly do an awful lot. But I mean, some of the things you sort of said there, like I assume we tend to, as customers, just take for granted. It all just sort of happens in the background, doesn't it?
Yeah.
But where are you different from, the other players that have been doing this and who clearly are some very big players out there? How do you differentiate from them?
Yeah, well, look, I think processing platforms like ours, they can be split into two broad categories. It's the monolithic legacy systems like First Data or TSYS. And then there are companies, these are the companies that will back like huge financial banks that will typically have a single product supporting millions of card holders and have very little variation or products. On the other hand, you have the modern issuing processors like Marqeta or Paymentology or ourselves, Digital Payments Group, right? So modern processors, they have obvious targets like the market disruptors, such as the fintechs or mobile banking apps and challenger banks. And the way that the market has moved in recent years, it really puts us, puts real emphasis on the speed to market and the way technologies and developments can be delivered. So we're certainly at the cutting edge front of that. We've created microservice-based architecture that really enables us to make small changes with really big impact in the background. But the thing I think we have that we differentiate a bit more is that we also have that responsiveness in-house. We're a program manager as well, so we can actually, we understand what our clients are going through. We're able to work with them in a very consultative approach. And that's something that, surprisingly doesn't really exist in the marketplace. So, we're in a good spot with the tech, but then also with that great set of experienced staff to help out our clients in the background. So it's a real niche for us.
And you mentioned there, obviously, you've got a relationship with MasterCard, but also you have a very important relationship with the Discover card, don't you? I think which is becoming quite important now.
Yeah, so Discover is a very big network scheme. They are coming in from the US. They're really looking to diversify into Europe and the UK, their prepaid and debit product. It's a real big opportunity for us. They are a huge aggregator. They are a big lead generator and they have major corporates behind them. And so we are in big discussions with some of their corporates right now, and the pipeline's looking extremely encouraging.
And prepaid is quite important to you. And again, it's maybe worth touching base on that. I think that during coronavirus, where potentially a few things have slowed down, you've actually done one of quite exciting things with your prepaid card to help like the NHS. Do you want to just talk through that?
Yeah. So we've really helped our clients with their clients as well to support some features. So during the the core COVID period at the start, it impacted everyone. In fact, including ourselves at the outset. We had a couple of months there where things were extremely rough. Transactions dropped right off. But when we look back at our statistics, we can see that cash dropped off, I think 43% cash withdrawals. And then online spend contactless went up, conversely 43%. So it's a real big change. Our clients were really struggling with some of their, their further clients that they might have, B2B products there. We've got Prepaid Financial Services, a very key client of ours. They are a big challenger bank, done great things over the last couple of years. But they had problems where the NHS were there. They had the Spanish Post Office. It was the government in Greece, the relief products out there. They just couldn't get the cash to the people that needed it at the other end. It was an extremely tough environment where they were very cash-based products. We were able to turn this around with them almost overnight to become virtual type products. And this really pulled them and I guess us out of this gap with COVID, and then became a real differentiator. There's a phrase out there, something like there's been 5 years worth of change have been really compacted into that 6-month period. So certainly helped the likes of us move forward, and we're excited about it. Not the way it happened, but what's come out of it is very important for us.
So I'm interested obviously in how you're going to grow the business. But let's just take a little step back, because actually the business has been around for a little while and perhaps was a little bit flat, shall we say. Mm-hmm. But you're a fairly new team that's come in. Do you want to just explain actually who you are, Rob, and where you've come from in your team, and why this is going to change the trajectory from a sort of slightly flat to up the steep curve, so to speak?
Okay, well, look, I've been in the payments industry for about 15 years now, and I've worked across different fintechs, processes. I've also been in the banking industry. I was with JP Morgan for 8 years there, working on the prepaid and virtual products across the US and also in the UK and Europe. But we've got a very interesting team of 50 people here. It's spread globally with a lot of experience across issuing and also in the processing space. So massive depth of knowledge, and that really interested me coming into the company and meeting these people, some of who I knew beforehand. If I put it into context a little bit, the history of the company, right? So the founders originally purchased it knowing that the core architecture was very strong, but they knew that there was some strong investment that needed to happen between 2017, 2018 to ensure that we could get the global reach and to expand the compliance and operational features there. So by the end of 2018, they had a core product that could be delivered globally across the MasterCard network, open APIs, able to integrate, and then PCI DSS compliance, so a real good foundation to build upon. And then in 2018, when I came in and brought in another couple of the managers there who are helping to shape the business, we ended up getting new management, new shareholding, and a new director structure as well. And so we've really taken this new approach, or I guess a revised business plan that we put in place for that last couple of years, and then slightly into the future here that we're talking about now. One was really to ensure that we're ahead of the game. So it's the microservice, it's the cloud environment and everything else that we're pulling in. Number two is really ensuring that we analyze the gaps in the marketplace. So we've put in a whole suite of products in the last couple of years. It's everything from websites, further API build, open banking, FX, all of these things, a whole suite of services, meaning that we can actually now launch our own products. But actually, more importantly, not that, it's that we can fill any of the gaps in the offerings that our clients have. That's the key thing. And it's a real differentiator for us. The third thing is choosing the right partners to work with. So as we said, we've got that Discover relationship, absolute aggregator. Issuers and financial institutions are the other ones. So the issuers also have multiple programs under them. They have different market brands and fintechs below them as well. And again, they're aggregators for us. They bring more clients in. So, we've spent the last couple of years with the revenue, yes, being quite flex. We've been pushing all of the funds from the core processing business back into building out all those services, building out those relationships. So we're absolutely poised now to take that next future step forward. And we're really excited about what's coming.
And that leads us on to the what we're really talking about to a certain extent, is that obviously you want to do a fundraise to accelerate this growth. So do you want to just quickly sort of explain what the fundraisers you're trying to do, or we're trying to do with you, and also what sort of size of market that then gives you the ability to approach, giving you this fantastic upside?
Yes, absolutely. Thanks, Andrew. So we're looking to raise between 5 and 10 million. And those funds will ultimately be used to really, we've already got strong tech and strong processing side, but technology is always evolving and changing. So clearly we want to be on the cutting edge of that at all times. So we'll continue to invest into that. We want to double down on the development and the delivery of the leading products that we have. So this is including, actually, we've got an SME product that we're building out in the background. It's a standalone cookie cutter type product that we have with extremely good innovations behind it. Virtual supply chain payments and products is another one that we're going into now. And this is something that we know that Discover are extremely interested in as well. And that's bringing in some of those big corporates who are talking to us about it. We'll complete cloud migration, and then we'll really go into regional specific readiness. So into the future, 2024 and beyond, we're looking to move into Asia and then potentially the Middle East, slightly shorter term than that, into the US as well. So that readiness is there. That's an important part of what the proceeds will be used for. But actually, right up front, front loading that spend that we get will be into the PR, the marketing, and the sales engineering. I guess a lot of people may not have even heard of us out there at the moment as we've been building out all of our services. Now we're poised with all of that operational readiness. Everything's ready to really push us forward. So now we need to get that PR, marketing, and team behind it to really drive it out there. So it's all recognized, all being built out in our plan. We're ticking them off one by one, and here we are now, ready for the next step.
So, and again, I mean, at the moment, it's a very exciting space, but you are in a way, although you're already handling, pretty big volumes already, aren't you? I think you've got, is it 12 million cards and I don't know, 25 countries you're in, but you're actually relatively still quite small. As you say, there's huge expansion capability. Mm-hmm. So, the sort of target market, I think you are projecting very strong revenue growth when you complete this fundraise. I mean, do you want to put that in a sort of, it's very difficult to quantify it exactly, but I mean, the ability to double, triple, quadruple is really there, isn't it? It's what I suppose I'm trying to get at.
Yeah, we're an extremely,
the leverage is there. That's the word I'm looking for.
That's right. No, we're an extremely scalable business, and we've been really getting it to that point where it is scalable. In fact, back in 2018, we had 7.9 million cards, I think it was. Now we've got 12.97 million. It's a massive growth that we've already had there, but we can expand exponentially, like very easily. There's no stress upon the system to do that, and that's something we've really been working on with the tech team over the last while. Where the business plan becomes quite aggressive is that we have these, as I say, the relationships with the new issuers, and then with these market brands and fintechs out there. But certainly the issuers and the schemes, they are the multipliers. We've really been concentrating down on that. We know we can deliver these individual products for market brands or fintechs out there, but these relationships with, say, PSI Pay, one of them out there, or prepaid financial services, are really key for us in order to just multiply that volume. And the pipeline's much more interesting for us now, as we can see some of those things that are coming up and pick and choose the ones that line up with our values and what we're trying to achieve as well. So extremely interesting time for us. It wasn't there a couple of years ago, but we're there right now.
Yeah, I mean, the other really interesting thing is, I mean, as you point out, you've actually got a very good, strong business that's working very nicely. It is. The money you're raising is genuine growth capital.
Absolutely.
And so in a way, that's exactly what investors want to invest in.
We will continue to get through, Andrew, without investment, but it would be a slow push. And I think we'd lose some of the opportunities that we have. We've got to that point where we've created the opportunity. Now we need to actually grapple onto that, hold on to it, and then fly with it. Yeah. So without that investment, we'll lose some of that. But we're fairly confident that will come through, and then we'll make great things happen.
But I mean, I look at it. You tick it all the box. You're a good new management team, a nice, sound, steady business in the background, raising money for growth capital, and you've got some great partners such as Discover. So I mean, you've actually got a ready-made meal here, all ready to go, so to speak.
Yep, I think you summarised it very well. I should press record.
Well, we'll maybe call it. I mean, I'll give you if there's any final point you'd like to make, but if not, I mean, is there any final point you'd like to make? Do you think we've covered it all?
Well, I think we have. Look, I'd just say again, we've got an extremely great team behind me. I'm really proud of the team that we've got, and we've had that business plan that's been solid. We've been ticking off all of the elements, and we're at that point to go to the next phase. And I'm hoping, that next part of the business plan will come to fruition, and we'll make exciting things happen in the marketplace.
Well, I'm very excited by your business, and I'm very confident that we're going to find a good investor. But if anybody's watching this and they're interested in hearing more, please contact myself at VSA Capital or any of the VSA Capital team, or obviously you can contact Rob directly as well. But, fingers crossed, this is a very exciting opportunity for everybody. So really good to talk to you, Rob, and I'm sure we'll be talking again soon.
Thanks very much, Andrew. Much appreciated.